Time to deal with the juggernaut Microsoft. We'll start off very easy with this one. Ticker symbol is MSFT, traded on the Nasdaq with a cozy 1.14% dividend yield. But don't let that fool you, it's growing year on year consistently. A very interesting dividend. We'll be looking into that later on in the video. Market cap of $1.7 trillion. Currently trading at $238. And for any UK investor, that's not $2.38 because for the UK it's normally displayed in pence. This is not cents, this is just dollars. So $238. Probably £238 with the way that the pound to dollar is nearly 1 for 1 at the moment because, you know, the economy and whatnot. Today we'll be discussing in depth the Microsoft Corporation, massive technology company which owns quite a few things that a lot of you may not even be familiar with. Well, you'll be familiar with these, but you won't know Microsoft own them. Let's go through it. Bethesda, we've got Mojang, so we've got Minecraft. They also own Skype. They bought LinkedIn, and they bought a few behind the scenes. They also own Xbox, and are probably one of the most, if not the most used operating systems across the world over. Then when you go into Microsoft Word, PowerPoint, Excel, you just crazy amounts of software that a lot of us have used through school, through work, through personal use. If it isn't Apple, or if it isn't like Linux or something, you probably go down the route of Microsoft. And here we are. 221,000 employees, $168 billion US. Founded in 1975 by Bill Gates in Albuquerque, New Mexico. Now, their subsidiaries include GitHub, a sort of coding website, LinkedIn, social media for businesses and like sort of employment, a bit more on the professional side in certain respects. Yammer, Flipgrade, two other wee companies that they also acquired. Now, I'm going to use this from the Visual Capitalist to kind of give you an idea what they were picking up. So in 2007, they acquired a Quantive. Once they were added to the fold, it helped with advertisers, agencies, and publishers by enhancing Microsoft advertising platforms and services. They then went on to pick up Skype in 2011 for $8.5 billion. They then went on to integrate that later on. They did pick up Nokia only for a part-time, only for about 2 years when they tried to release the Windows Phone. Didn't work, so they sold that off. LinkedIn was picked up for $26 billion, the 575 million members, which is closely matched with Microsoft software. There you go. And then they picked up GitHub in 2018. Then went on to Bethesda Studios and Mojang for Minecraft. Brilliant pickups, and we're going to jump over to their website here. Now, I can talk all day and night. If we were to go through everything Microsoft owns, this would probably be a couple-hour video. Instead, I'm going to, glaze over the vast majority of it, because a lot of you are very familiar with this company. And if you're not by the end of this, feel free. There is just a mountain worth of stuff. So, if you've heard of Xbox, the console, of course, owned by Microsoft, operated by Microsoft and very integrated with Windows. I, for example, don't even have an Xbox connected up, but I play Xbox through Windows, and partnership made in heaven. It is fantastic. And that's only one aspect of Microsoft. There is plenty more. In terms of cash flow, this thing is one of the rare companies you'll ever see at this level of cash flow generation for dividends. And it's been growing year on year, and the dividend per share, again, has also been growing. We have the Microsoft Surface, Xbox, as I mentioned, and the Microsoft 365, their package for all of their softwares here. And not to mention Microsoft Word, Excel, PowerPoint, Teams, Outlook, and OneDrive. Some of these you may have never even used, but they are used extensively. There's also a few other software, but again, it's exhaustive. It's for personal use, for business. They cover the world over with all of these. Jumping over to Simply Wall Street, one of the websites that I use to have a wee deep dive into any company here. Now, let's see. They score on the snowflake analysis, which goes over value, future, past performance, their health of their balance sheets, and their dividend. Microsoft scoring near enough flawlessly. I think they're one of the top companies for this. Flawless balance sheet, good future prospects, past has been fantastic. Their value for the company is apparently very good on a discounted cash flow model, and dividend again also fantastic. Now, significant insider selling over the past 3 months. We'll have a look as to why that may be the case. Trading at 26% below its fair value. That's based on discounted cash flow model. We will be looking at the intrinsic value, which is another way of looking at it, on alpha spread later in the video. And without further ado, let's dive in now. You can see here there is so much happening. Strategy, management, dividend. We'll select just the dividend here. Quarterly dividend increase. There we go. Of 10%. Very nice. Very, very nice. So let's see. They laid off 1,000 employees across various divisions, citing global slowdown. Again, sometimes companies in the current economic climate kind of, tighten up and trim off a bit of the workforce. It is a necessary evil in certain corporations, and that's the way that goes. Let's go down here. Pay ratio is 24.4, which is pretty normal for software companies. Massive market cap, massive revenues, massive earnings. Valuation 5 out of 6. So we'll see. Against some of their peers, peer average meant to be 20.7. Really only Oracle and VMware sitting nearby. Let's see, what about industry? Industry average, they actually sit quite low. They're sitting down with Oracle Japan. Oh, any other recognizable ones we can see? Looking at pay ratio for Microsoft is quite something, because again, they are just a juggernaut on their own. You've seen what they own, you've seen everything. We're going to see what their future growth looks like very soon here. 26% undervalued on a discounted cash flow model. Now, gives a fair value of $324. Now, that isn't, again, gospel. It's not financial advice. It's just a way of looking at it and going, is this undervalued? Is this potentially overvalued? And it is one of the many ways to measure a stock. But again, the stock could go below that. It could go above that. It's, again, just one of the tools you can use to make a good informed decision, of course. Growth, 11% per year. So at the moment they're sitting nearly 200 billion in revenue, 72 billion in earnings. And they're expecting by 2025 to add just a casual 100 billion extra in revenue and 25 billion in earnings. Free cash flow, they've only got 65 billion in free cash flow, growing again to about 100 billion in June of 2025, according to analysts. Past performance, again, back in 2016, they were 86 billion, 10 billion earnings, and again, almost a 7 times jump in earnings for double of the revenue. So definitely very impressive by all accounts on this one. Very good, high quality earnings. Down to their financial health, they score 6 out of 6. Microsoft have over 169 billion in assets and short term, and then 195 billion in long term. Quite high liabilities, of course, but you can see here from 2018 they've been growing their debt equity ratio all the way to 30% from back at 97%. Massive growing gap. They have more cash than their total debt, which is perfect. How much do they actually have in cash? 104 billion. So in terms of acquisitions, if Microsoft want to pick anything up, they are more than capable of taking advantage of any situation that arises, with debt sitting at 49 billion, which I'm sure is totally covered by operating cash flow and interest payments. No concern. So down to their dividend yield. Now, it is 1.15%. They score 4 out of 6. It's stable. It's growing. Earnings and cash flow coverage are perfect, but the reason it doesn't score 6 out of 6, it's not a notably high dividend. As you can see, industry average is 1.2, so it's quite low in this sort of software sector. As and this is seen as a sector that's got massive growth potential into the future, and therefore, rather than paying a high dividend, the likes of Coca-Cola and whatnot, who, you know, spending the money isn't as efficient as just giving it back, reimbursing shareholders. These companies don't pay a huge dividend as of yet, but into the future that could possibly change. Now, one of the most impressive graphs I've ever seen for dividend per share. You can see back here in 2012, sitting here at about 80 cents per share, climbing all the way to $2.48, little over 10 years later. So that's nearly a tripling, almost, yeah, basically a tripling. Now, their yield was back at about 3.2%. That's why I say always, you know, don't look at yield, you look at dividend per share. If you could have snagged this when its yield was a bit higher, you would have got it at a lower share price. And of course, between capital appreciation and your dividend per share, you would have been looking very pretty in that one. As you can see, paying out 26% earnings to shareholders. Cash payout is 31%. Totally covered, perfect. No, lots of room there to play about with. Now, when we go down to ownership, there was a massive sell-off 9 to 12 months ago by 4 individuals, and then there was a sell-off there by a few other ones more recently. Of course, that one's sitting at 315 million, but the other ones are only a combined, 30 million recently. You can see all the sales of the board members and head of marketing and lots of other people. Now, a lot of you do point out that seeing shares sold recently can be, a bad sign, or maybe people taking advantage of, seeing how the economy and all might be going. That is possible. Of course, that is, entirely possible. But Microsoft is still a very, very strong company nonetheless. 30% by the general public and 71% by institutions, with Vanguard and, of course, BlackRock sitting at first and second place respectively. Okay, let's jump over to Dividend Max, another website that I use to analyse and look at dividends. It gives you a wee bit of information on Microsoft, when the dividend will go X, which means the ex-dividend date. Essentially, you have to own a share the day before that date. So if it's the 16th of November, you need to own the share by the 15th of November in order to get the payment of the dividend. They pay 4 dividends per year, excluding specials. So quarterly dividends. And they just are growing every year. They just seem to bump them up a wee bit. Most recently, it went from 62 cents to 68 cents per share. Another graph to just display back in 2012, 80 cents on a said. More recently, $2.24 per share. Again, if you had 100 shares, that would be about 100 shares, $25,000? $25,000 at the moment. You'd get a payout of roughly $62 to $68 per quarter. Something to think about, isn't it? Jumping over to Dividend Watch, another website that I use for tracking dividends, my portfolio, and various other things. You can see here it gives a wee bit of information, ticker symbol, exchange sector. Then a good read into it all. You can see that, they have Outlook, OneDrive, LinkedIn, Dynamics 365, cloud-based systems. We didn't even go into a lot of their cloud segment, which does make up quite a lot of the revenue as well. But as I said, you could get lost in Microsoft. It is a fantastically large company full of great, industries. Across a lot of industries, from gaming to software to cloud. Very impressive, I must say. Over to dividends, another wee chart, kind of different to look at. You can see where it bumps up at the end of every year just to have a wee bit of an increase. Last 10-year growth sits at about 10% for their dividend. You can go to stock analysis, gives it a 9.5, which is a very good dividend safety score. So how safe the dividend is. Of course, this is just a calculation. It's not, it's not saying the dividend's 100% safe, but taking in everything into account, it is really, really good. Fundamentals, another wee way of looking at it. You can see 2018, you can just see the net income skyrockets. 136%, 12%, 38%, 18% into 2022. Quarterly again, everything's looking up and quite in the green, especially cash flow. See, when you see cash flow grow the way it is growing, there's just very few companies that can say they've safely increased from 43 billion in cash flow to 89 billion in a couple of years. Over to Alpha Spread. Alpha Spread calculates intrinsic value. You can have a wee look. I recommend, having a wee Google. There are lots of great videos that break down exactly what intrinsic value is. But for me, I'm just going to say it as a different way to calculate the price people are sort of willing to pay for a stock. What's it worth, taking into account an awful lot of factors. At the moment, it reckons they're about 11% overvalued, which is very strange because you can see the discounted cash flow model said it was 26% undervalued, whilst intrinsic value goes 11% over. Although in a best case, it's still 21% undervalued. So you can say the best case is similar to the discounted cash flow model. They both gave around the sort of 300 to 320 mark. Worst case in this one's 25% overvalued. But as you know, at the moment, it's $237. Well, let's see here. We can go over to Trading 212, the website that I use for my own brokerage. The fees, I buy stocks here and there, so not having a transaction fee of a couple of pounds per trade is really handy for me. I don't really go near any of the CFD trading, so I avoid a lot of the fees. I think that's how they make a lot of their money, is over in CFD trading. I don't do that. I find it similar to the sort of gambling. For me, I just stick to the good old ISA for the UK, and they're just a normal invest account. Gives a bit of information on the company. You can get a chart here, advanced chart. You can obviously buy it. You can see when the market opens, and you can set a wee alert if you want to see when it goes to a certain value, and it'll alert you to that. And then it goes in, gives a few nice charts on revenue to net income, total assets, liabilities, and then of course their operating cash flow, which you can see they're operating year on year. Woo, it is impressive. Let's see how much they paid out in dividends in 2022. They paid out only $18 billion. That's very impressive. But yes, that has been Microsoft. Let me know what you think in the comment section below. Is it part of your portfolio? Do you own Microsoft? Do you plan on owning Microsoft? Let me know your thoughts on the stock. Always love a good discussion in the comment section. Be sure to check out any other company I've done. I've done quite a few UK ones, and I will be looking at a lot of the US dividend stocks as well coming into the future, as well as my US portfolio, which is still in the works. But by the time you see this video, it might already be out. Thank you so much for spending the time to watch this video, and have a fantastic time wherever you are. I'll see you in the next one. Bye bye.